All right, let's get to Spotify releasing Q3 earnings this morning, raising its 2024 outlook and beating Wall Street estimates. This comes after the streaming platform doubled down on cost-cutting measures, laying off hundreds of employees this year, making programming cuts, and merging with smaller podcast studios. More on this. Yahoo Finance reporter Alexandra Canal is here to break this all down. Ali, we're looking at a rise of just about 5.5% in pre-market trading.
Yeah, Shauna, a really solid quarter here for Spotify. And in the first time in over a year, they reported a profit. We're making money, people. We're profitable. And if you've been a Spotify investor, you've been waiting quite a bit of time to see this moment. Spotify reporting net income of 65 million euros. Again, a significant beat considering the expectation on the street was that this would be a loss. Profits were boosted by lower than expected costs related to personnel, marketing spend. In addition to strong margins in the quarter, margins have consistently been a metric that investors have been focused on. We saw gross margins of 26.4%, slightly beating guidance of 26%. The company said it expects margins to tick up to 26.6% in Q4 before settling between 30 and 35% over the long term. And then on the user side, we did see total monthly active users tick up to 574 million in the quarter, also beating estimates. Spotify said those net additions of 23 million represented the company's second largest Q3 net addition performance in its history, with premium subs also coming in higher than expected. Now, in a slightly negative front, we did see average revenue per user for premium subscriptions decline 6%. Now, that was pressured by discounted plans, lower prices in emerging markets, but price increases will continue to offset those declines. But really, other than that, a very solid report. The stock did bounce around a bit in pre-market trading earlier this morning. There were some investor confusions that Spotify may have lost North American subscribers in the quarter, but that was actually not the case. CFO Paul Vogel clarified on the earnings call that rounding in the press release might have made that unclear. But speaking of that earnings call that just wrapped, Vogel did speak on that surprise profit turn and how there's more room to run. He said, quote, "Our expectations are now that we will consistently be in the black moving forward. Obviously, you never know what can happen in any one quarter, but we feel good that we're on a different trajectory and we've hit an inflection point with respect to profitability of the business." So again, very solid report. It's great that we're finally making money. Really, the fourth quarter, we should continue to see all of those key metrics outperform. Free cash flow, another one that came in hotter than expected. So overall, I'm happy. Spotify investors are happy, and clearly the stock is happy right now as well.
Yeah, Ali, music is my weight loss drug. I would get that on a t-shirt. Why not? AI DJ, though. I mean, my goodness, our own Julie Hyman is a big fan of the Spotify AI DJ, so it was good to see that get a call out, too. So thanks so much for helping us break down some of these results here, Ali. Appreciate it.